Los Angeles, and welcome to Stock Market Today. It's Alyssa Corum here. I'm joined by IBD Deputy Markets Editor David Chung, and on today's show, we're going to be taking a look at Vipshop as well as ServiceNow and RingCentral. But before we do that, let's take a look at the major indexes, Dave. We saw strong gains across the board and strengthening into the close, and this was after a little bit of teeter-tottering into negative territory mid-session, but the NASDAQ finished the day with a gain of about 4.7% after just whomping yesterday. So what do you make of today's gains?
Yeah, whomping is almost an understatement, right? There's not often you have a 7% decline across the board. So right. I think investors shook up by yesterday would have been happy with just a small gain even today. A big gain, 3 to 4%, or even actually more 4 to 5% levels. So a positive start to a potential day one of a new rally attempt here.
Yeah, that is very encouraging to see. So from here, we want to see at least a couple more days of buying, and then a potential follow-through day that would signal perhaps momentum to the upside.
Absolutely. We found, based on decades of research into the market, that every major market bottom featured a follow-through. And in most cases, that follow-through day is going to occur on day 4, day 5, day 6, or day 7, sometimes even day 20 of a new rally attempt. Today is day 1, so it's still too early to conclude, yes, we're now in a new uptrend. Let's be patient here, watch how the market acts on a day-to-day basis.
Yeah, very well said. We'll be keeping tabs on that potential rally attempt. But in the meantime, we're also keeping tabs on stocks to watch for when we do see a new uptrend. Vipshop is close to the top, if not at the tippy top of that list, after we saw a recent breakout, featured recently as an IBD stock of the day, and boy, is it holding those gains.
Absolutely. Not much to add other than these superior ratings by VIPS, Vipshop, a leader not only in the China stock market, but also in e-commerce in general. It has one of the highest composite ratings within the retail internet group, 95 composite. That means the fundamental, the technical, and the fund sponsorship factors are in the top 95% of the entire IBD database. It's kind of extended right now from a recent double bottom buy point, Ali. The buy point was exactly 1507. We generally like our IBD readers and investors to buy within 5% of that buy point, which is 15.82. Looks like it finished near 17, so this is really strong action. Maybe it can pull back into the buy range and give you another chance to buy. Otherwise, keep it on your watch list. Maybe a secondary entry will appear.
All right, we'll have to keep an eye on that one, as well as some names out of the enterprise software industry group. So let's go ahead and take a look at RingCentral. Ticker there is RNG, finding support at the 50-day line today, up over 2%, slightly above average turnover, and really compelling to see the price action that we saw yesterday out of this name, closing well off of the lows, whereas as we've been saying, many stocks got quite hammered yesterday, so some nice support here.
Totally. Looking at that daily chart there, you see that yesterday was a sharp decline, but yet it held support at that red line, the 50-day moving average, which is rising. That means over the past 10 weeks of action, it's been up. And it's also up year to date, considering that most of the indexes are down sharply year to date. That's a real sign of outperformance. We've also started to talk about RNG, RingCentral, in the IBD Live show. I have this hat right here. That's why I wanted to show that this is what I usually wear on the show. They call me Hat Man, but just a little shout out to IBD Live. But going forward for RingCentral, keep in mind that they're benefiting from this potentially strong fundamental shift to more video conferencing, more people working from home remotely through the internet, and RNG is kind of like ZM, Zoom Video, in right. capturing possibly more growth as a result.
Yeah, definitely. Seeing some, areas of the market benefiting due to coronavirus,
exactly.
From e-commerce to now teleconferencing, the software name. So elsewhere in the enterprise software group, ServiceNow also on our radar with a pretty strong relative strength line. Now this one isn't holding above its 50-day line, but it could be consolidating here and potentially setting up for a new entry and strong fundamentals here.
Ali, you nailed it right on the head. There was a recent breakout point at around 303. Also, there was a cup with handle within the recent chart pattern that gave you a slightly lower buy point around 284.40. From that buy point, it actually rose more than 25%. 25% is usually a good time to at least nail down some gains, and especially it was timely in this case because we had the coronavirus fear taking down all sorts of stocks, and eventually ServiceNow and OW, as you can see, gave back all of those gains, right? So a round trip is really tough to deal with, but on the other hand, the stock is still yearly up to date, fantastic revenue growth, 30% to 41% year over year over the past 8 quarters. That is steady, solid growth, and you can imagine the earnings growth being very, very strong too, a 97 EPS rating. So we're bringing this stock up just to highlight the fact that some stocks are going to become new big winners again once the market trend starts going positive. Make sure your watch list is very active and focusing on these high relative strength names.
Yeah, really good point there. And even though we aren't seeing it above the 50-day or the 10-week line on this weekly chart here, we're seeing it holding above the 40-week. So that
Precisely.
is the, cup half full way to look at the declines that we've seen for this stock.
Absolutely, and even at the 40-week moving average, which is kind of like the 200-day moving average on a daily chart, I particularly like to watch that 40-week moving average. Weekly charts really give you a good sense of the stock's behavior and strength versus the S&P. You see that blue line on that weekly chart, that's the relative strength line, if I'm not mistaken, right, Ali?
That is correct.
Yeah, and when you see that rising RS line, that means the stock is outperforming the S&P 500 even on down days. Mm-hmm. So you could have a stock down in price, but if it's down less than the S&P 500, that means this stock is actually showing some real relative strength and ready to maybe break out into new highs ahead of other stocks once the market turns.
Yeah, I mean, we can't understate that enough. Shopify, a great example, coming out of that Q4 2018 correction and just went on such a huge run. So we can't say enough how important that relative strength line is. Dave, thank you so much for your analysis today. We really appreciate it.
Very welcome. Thanks for having me again.
Yeah, and for more in-depth analysis from Dave and the rest of the IBD Live team, make sure you are tuning in every morning to our daily live stream. If you haven't checked it out yet, make sure you go to investors.com/IBD Live for all the details. Get you some more of the Hat Man at Saito Chung on Twitter. We look forward to you participating, not only where we share our screens, getting that in-depth analysis, but also a really, really great Q&A.
Absolutely.
Is part of that process too.
Yeah, and the summary of the Q&A is also sent out as part of a newsletter every day to all our subscribers, as well as an updated list of watch list stocks, and those are ready to possibly break out.
Exciting stuff. All right, and you can also follow us all across social media, whether that's on Twitter, where we are most active, but also Facebook and YouTube. We have our live streams. Go there as well, and Instagram. Make sure you're following along. Thanks so much, everyone, and we'll see you right back here tomorrow.